Why you should opt for voluntary GST registration. When it comes to running a business in India, one of the most common questions entrepreneurs face is whether to register under the Goods and Services Tax, GST. While GST registration is mandatory for businesses with an annual turnover exceeding 40 lakh rupees for trading or manufacturing and 20 lakh rupees for service-oriented companies, many small businesses below this threshold wonder, should we still register voluntarily? Here is a breakdown on why voluntary GST registration can actually be a smart move. GST aims to streamline taxation by ensuring that tax is collected at every stage of the value chain but only on the value added at that stage. This means businesses can claim credit for the tax they pay on their purchases, known as input tax credit, effectively avoiding double taxation. However, this benefit is available only to registered dealers. Let us illustrate with an example. Scenario 1. Non-GST registered dealer. Suppose you are a stationery trader who buys 50 pens at 80 rupees each with a 5% GST. Purchase price, 80 rupees. GST at 5%, 4 rupees. Total cost per pen, 84 rupees. Now, you add a 10% profit margin, 8 rupees and 40 paise, bringing your selling price to 92 rupees and 40 paise. Since you are not registered, you cannot claim the 4 rupees GST paid on your purchase. It becomes part of your cost. Scenario 2. GST registered dealer. Now, let us assume you are GST registered. The same pen costs 80 rupees with 5% GST. Cost per pen, 80 rupees. Profit at 10%, 8 rupees. Selling price before GST, 88 rupees. GST at 5%, 4 rupees and 40 paise. Total selling price, 92 rupees and 40 paise. In this case, you can claim input tax credit of 4 rupees paid on purchase, and the GST you charge on your sales, 4 rupees and 40 paise, is offset by that input. This means you effectively pay GST only on your profit margin, not the total sale price. The hidden advantage, although both scenarios result in the same final selling price, 92 rupees and 40 paise, the registered dealer enjoys a cleaner accounting process, reduced overall tax burden, and better credibility in the market. Additionally, most businesses prefer dealing with GST-registered suppliers to avail their own input tax credits. So, being registered can actually expand your customer base and make your business more competitive. What about composition scheme dealers? If your turnover is below the prescribed limit, you might consider registering under the composition scheme. While this option simplifies compliance and allows you to pay GST at a fixed rate, it comes with a key limitation: you cannot claim input tax credit. So, while the composition scheme might reduce paperwork, it does not really help you build your business in the long term or pass on tax benefits to your customers. Summation: voluntary GST registration may seem like an extra administrative step, but it brings several long-term advantages: better tax management, improved credibility, and a competitive edge in the market. By becoming part of the GST network, your business stays compliant, transparent, and ready to grow beyond small-scale operations. In conclusion, if your turnover is below the mandatory threshold, registering for GST voluntarily is a proactive move toward sustainable business growth. Don't forget to share, like, and comment if you found this insightful. Subscribe to our YouTube blog and join our tax group for more essential business knowledge. Our website, www.total-souls.com.